Good morning, everyone. And a little icon here says you are live. So I'm guessing I'm live. Thanks, everybody that was here yesterday and that's kind of helping this thing grow. And McGraw, Doc, I've got a few different screen names here. And I'm starting with my daily plan here. And quick introduction of what I'm going to be doing here. I'm going to be going over basically what's in my daily plan and my roadmap that I send out to my to people who subscribe to me on Twitter, uh, also on Substack, also wherever on Discord. I'm around. People know me, and so good morning. Okay, and so here we are. I'm just going to kind of go over the plan, tell you what I see. Going to kind of freestyle it a little bit. If you know me, that you know that that's kind of how I roll. So I'm going to freestyle it a little bit. I'm going to pull up my notes on the other computer so I can kind of have some kind of structure to what I'm looking at, and I'll tell you what I see, how I see it. We can kind of get into discussions if there's questions. I see some familiar faces here. Oh, now my buddy would tell me that I'm supposed to put my share my like Substack link and all that, right? So let me do that real quick. Tech and tech organizational stuff is not my strong suit, and I have discount links for some of the services that I use. I'm not the guy that calculates all the GAM and all that kind of stuff. I just use different services, and like I was saying yesterday, different tools work better for different jobs. Okay, so I'm going to start with a quick review of yesterday. Yesterday was a flat range compression day, as we would expect. Let me take mental cues chart up and let me kill my levels for a second. And so this is from mental cue, and we'll get into a few other ways I like to visualize it. Okay, so yesterday we were basically in a really tight, narrow range. And as I said in my note, as expected. Why? We're in this big quarterly options expiration, so the range gets compressed. We're not going to go through all the theory of all that now. I'm going to have quote unquote special guests coming up to explain some of the theories, some of the tools they use, whatever. As time goes by, I'm kind of trying to line it up and inviting people, etc., to make this more valuable for everyone. So we had that range compression day, and there was some comments about VIX kind of spiking a little yesterday. VIX, I'm going to assume that people know what VIX is. VIX kind of popped a little yesterday, so there was some kind of possibly demand for hedging. And I'm just going to say this makes sense for one simple mechanical reason. The VIX calculates a strip of options, roughly 30 DT. I think it's 28 to whatever it is. And as the window rolls out and captures more and more of mid-July, it captures more and more of, I think there's a July 9th tariff deadline. There's a July options expiration. So as it captures more risk periods, it's going to adjust. Consult your local vixologist. Like I said, there's a lot of guys on Twitter that are way more in the weeds than I am. I'm sure you can find some interesting debates where they each tell each other that they're wrong or they each tell each other that they're right. And but for our purposes, that's what went on, and I don't see it as a big shot across the bow warning sign. Although There are some possible warning signs. I might as well get to them now, and I'll maybe write something up a little more detailed for over the weekend. Um, CTAs, commodity trading advisors, hedge funds that follow trends. And there's lots of people that have notes on positioning. And broadly speaking, if we stay above 5,800, 58, 57, 75 ish, different people calculate it, whatever, trend should continue and kumbaya, everything's going to be fine if you're a bull. If we break whatever the magic line is, 57, 75 ish, 5,800, 5,750, wherever that magic line is, selling can start to come in, accelerate momentum chase, etc. I haven't looked closely at options positioning to see how weak or strong something is below us into July, but we do have the unclench when coming up next week. As I've been mentioning, we have VIX expiration, SPX AM expiration, and FOMC on Wednesday. And so that can shake things up. We do have, however, the JP Morgan collar trade, which we'll do another show on maybe coming up July 30th, which should be supportive around 5,900 for now, should. And that's where we are. So that's kind of a quick, broad picture. Okay. And so now VIX is kind of fading, retreating. Let's get back to S&P 500. Now, overnight last night, as I was like sitting here kind of doing my preliminary note last night, I glanced up and I saw OMG Boner Bar. I said, what happened? And while I couldn't find any firm news, and somebody might have found it, it seemed like there was some kind of leak or speculation of Xi, Trump, or USA China negotiations maybe going good. That was the best thing that I could find. Well, whatever happened, unhappened. And now we're kind of in the same range that we've been in. And both from a price action TA-ish point of view, as well as from a SPX option positioning point of view, we're in the same range. The SPX options are tending to cluster around the 59, 20, 25, 30 area, with some people taking speculative long bets and some people shorting somewhere in here with kind of choppy structures, which has been giving us this choppy action, and then we have kind of the broad downside support near here. The expected move for today, which we expect to stay within, hence the term expected move. That's the wrong chart. Where is it? Not the one? No, that's not the one. Is this the one? No, that's not the one. See that? I shouldn't have messed with it. That's not the one. That's the one. Okay. I got a lot of indicators here. So what this is basically, not basically, the roadmap that I write up, looking at positioning and what I think I see, what I think is important to me. I have ChatGPT or Claude, depending who's not busy, put those numbers into a trading view string, and that's all it is. It's not calculated on anything fancy schmancy. Okay, so here's where we are. Let's go to let me switch screens here. Looks like I have something else in here that's not supposed to be here, but it's not really changing anything, so we'll leave it alone. Let me go to, let's change my screen. Let's go to options depth. And I have discount links for Mentor Q and options that I'll probably have for other people that I'm associated with coming up. So here's the current positioning. Now, what we're looking at here is market maker positions, net position number. And to me, this outlines the projected path. And to the right of midline is where market makers are short options. We'll call that broadly supportive. The reaction we get is as price heads toward it, they buy and it's supportive. As it moves away from it, they sell, and it kind of pulls us down and gets us kind of in a sticky zone, in a pinning area. Now let's forget this guy for a second, the 60/50. Let's just kind of think about what's happening over here. And now again, we have market makers short options over here. So let's pretend this bar wasn't here. So we had the support bounce in theory from right around where we're stuck now. So here's a little cluster where we're stuck. And we'll talk about this in a minute. We would expect as we move up, then market makers would start selling. Market makers go against price. But then as we go down, they start buying again. And that's where you get this mean reverting drift. This is volatility selling. This is options being sold. And that's part of what causes this range compression. That's part of what iron condor guys like me love, and all my scalper friends complain it's a boring day and post memes of people yawning and everything else. Just a quick FYI, as a iron condor trader myself, who has a big chunk of how I make my money. Different periods and different regimes are more suited for that strategy than others. Not every strategy works all the time in every environment. So I size up, size down, will adjust how I do it depending on the environment. And I would suggest that people modify their strategies accordingly. I know some people kind of have like one size fits all strategies. And if that works for you, great with your risk management, whatever. But different market environments are going to require different strategies, whether it's position sizing, if you're scalping futures, whether it's multi-leg options, single leg options, whatever it is. So just kind of a quick word to the wise. Okay, but now remember I said that let's pretend these aren't here, but they aren't here. So let's pretend, well, let's not pretend, let's deal with reality. And these levels are going to be reflected on that trading view string that I have that the subscribers to my Substack get. And I also have a cheat card that they get. I'll pull up the cheat card in a minute. It's all based on these levels. It's not, it's all hand done manually. So we're over here. Market makers short. Their required response is to hedge in the direction of price. And so if over here, in the direction of price, in this direction, and we have this big ass technical term, look it up, we have this big ass 60/50 market maker short customer long call, 5,000 contracts at 60/50. Now, it's not my job to read people's minds. I'm not in the circus. I'm not a mind reader. But I guess we could say it's a bullshit bet. Doesn't matter if they're right or they're wrong. What matters is the prescriptive hedging response from dealers should we get up there. And that could be potentially magnetic, which I flag in my note, which is, now it looks to me like it might be part of a debit spread. Again, whether it was put on intentionally as a debit spread or if the structure turned out that way, it doesn't matter. So we have a 60/50. So If it gets sucked into here, then however the deltas and the IV add up, we kind of stall over here. And then we have more short options up here, 60, 80. And we have another big position up here. So I don't know what's going on up here. Kind of looks vaguely flyish, not really, but you kind of see that structure. So if over 50, we have a whole nother kind of set of mental computations to do. The chop zone where we kind of would expect for it to stay in here and probably not get over here and stay within this range here, the 6,000 range. Now, below 6,000, got a little bit of supportive area over here. We also have, if you look at price action, we had congestion in this area. And 69.85, we have some market maker short options that could potentially pull us down. I invited some people to the stage to present, but nobody took me up on it. Okay, fine. Scaredy cats. No, they're busy. But then we have some sold options here as support. So this zone here should hold. As an iron condor seller, I would be looking. I like to sell far away and wider. That's up to your own risk management. But we don't have a lot below this to be supportive should this break. Now, the expected move for today, let me take a look. I got it here, was around 60, 70 last night. And as of right now, it's 59.80. So, this is roughly within the expected move. And realized volatility or what's happened versus the implied volatility, realized volatility has been less. So we haven't been exceeding the expected move. Yesterday, the expected move was 35, and open to close, we moved, I don't know, 2 points, whatever it was. And so volatility is not realizing. That encourages um, volatility risk premium funds or whatever they are to keep selling, and we just get this feedback loop of this compression. Okay, so when I look at the heat map here, which takes into account this is just zero DTE positioning, which has an outsized effect because gamma's greatest closer to spot price and closer to time to expiration. So these have an outside influence. And this heat map takes into account the whole structure. And even on the whole structure, we see the 60-50 area, that potential magnet. Red is potential magnet. We see kind of the supportive area in here. The blue, we're generally in a supportive area. So even though we might not have a lot of stuff here, seems like there's background stuff over here. There's certainly lots of support down here below 5,900. So I sold some stuff down here. Maybe it was last week, below 50, below here. And down here, things could get ugly. And quick note, I mentioned those CTA numbers. Apparently, for some magic number, some magic reason, according to whatever Guru Goldman or everybody's got their own secret sauce, below 57, 80, but right below this area is where CTA selling would kick in bigly. So that's something to keep your eye on, assuming they're right. I figure they probably have better access to information than me. Doesn't make them right, but makes them somebody I'm going to listen to. Okay, let's look at charm, which is decay. What are those black lines? Okay, I'll get back to that in a second. And I'm going to have Options Depth is going to be doing a walkthrough of that platform, I think tomorrow. I'm not sure when. And I'll make sure that he's available. He'll make a link available to everybody that wants to find out more about how that works. If anybody else wants to come up and explain their platform more, whether it's Mentor Q or Gamma Edge, or I hope Val Signal says he's going to be on. Scott Nations of Nations Index says maybe in a couple of weeks he'll have time to pop on. I don't know if you remember yesterday, I think it was, I was talking about Volley, T-Dex, Taildex, and some of the indices and how we might use them. And so, I hope to make it educational, because this is stuff I've all learned along the way that I would say 85% of the time it doesn't matter, those nuances, but that 10% of the time or 15% of the time when it matters, that could be the difference between a winning day, a losing day, a small win, a small loss, or a big disaster day. So it's good to keep that in mind. Okay, so let's just zoom in a little bit here, and I'll get back to the black lines in a minute. So just looking at charm, where might we pin? Where might we close? So this is suppressive. So in this zone, market makers will have to sell as time goes by to balance to keep their deltas neutral. It's kind of pretty much just the opposite of the gamma, where the lines are. The function of how fast things decay and move is different. But that's so in this zone here, there's broad selling pressure, but as it gets darker is where there's more selling pressure as time passes by. In here, there's basically nothing. So see, at 10 o'clock, this is nothing. At 1 o'clock, it starts to have an influence. At 3 o'clock, whatever, suddenly it starts to matter. At 3 o'clock, this 60-50 matters. Why does the 60-50 matter? And this will be a good way to explain it. Lucy, you got some explaining to do for those of you that are old enough to remember. Explains it because customers along those 60-50 calls. Let's just think of those 60-50 calls. And we're around 60-50-ish. And it's near time to expiration. Those calls will have, just let's pretend, a 50 delta. They're at the money. And within 10 minutes, there will either be a 0 delta, if they're out of the money. If we're 60-49 and 99 cents, there's 0. If there's 60-40, 60-50 and a penny, they're 1 delta. And market makers have to walk this tightrope of being long or short futures for something this large. And that's why you get these crazy moves sometime at the end of the day, or one of the reasons why. And no, it's not market makers making you lose money or tricking you. It's mechanical. Their systems do it. That's it. They don't like it. And Val Siggs will come on and explain to you a little bit more. And that's what's going on. So that's why you get these kind of, you could get this whoosh up, or you could get this smush down if we're in this zone at the end of the day. So one possible pin would be right in here in the 60-40-35 area. Another possible pin would be in the blue area. Another possible set of pins would be in here, etc., moving down. And with this broadly suppressive overtone, but if volatility goes down, then that changes. It's not as suppressive. If spot moves, that changes. So this is a static picture. let's get back to the black lines, and I'll do my best to explain them. So this black line up here, these black lines you could think of as flip zones, where a change of character, for lack of a better word. Um, and as you see, if you just look up here, suddenly we're red. Market makers are short. There's long calls up here. And incidentally, a couple weeks ago, forget when it was, a big trade came in. They bought I think it was either the July AM or the July end of month 6,400 calls in size, 20,000 contracts or whatever it was. So I bought one for fun. That thing is green. That thing was a double at one point. I didn't take it off right away. It was cheap. It was like $500, like $5. But I'll sometimes do that. I'll buy something for science. And so there's big positions up there. Now, just FYI, that doesn't mean that they think we're going to get there. They're playing convexity most likely. If there's a tariff deal or whatever, who knows? I'm just saying. Um, so did that answer your question about the black lines? And the green lines are what you can think of as where market makers are long, where there's going to be kind of a stalling response where market makers are going to be selling, but if we're above it, they're going to be supportive. And the blue is generally supportive. So you see, here's time axis. So you see going to the end of the day, it's kind of supportive. These yellow areas roughly correspond to kind of those little voids. They roughly correspond to these kind of things. Whoops. They roughly correspond, it's easier to visualize it here. They roughly correspond to this kind of stuff where you have, the market makers positive here, market makers negative here, positive here, and you get this sort of path of least resistance or where it should rest. Some people call it a resting spot. This is kind of where the natural flow of hedging response, leaving exogenous forces out of it, would put it. That's what these kind of yellow lines are. Okay. So that's that. Let me see. I still don't have anybody that jumped on the stage here. I don't see any Twitter people. Do I see any Twitter people here? No, I'm not sure what happened on Twitter. It shows it's broadcasting on Twitter. Well, either they're here or they're not. Hey, if anybody's on Twitter there, type in and say hi so I know you're on Twitter. Or not. Okay, let's go back to some charts. And let me pull something else up. I don't remember which is which. Let me see. Okay, okay, so this is the one we want to see. Okay, let me pull this up. I now go back to Mentor Q for a second. Not sure why it's not populating. I don't know, it's not populating for some reason. Could be me. All right, we got this. Good enough. And so you see the 0 DTE line in the sand level, nice and clean and easy to see without all my crazy numbers, is 6,000. And we're in these kind of zones. The numbers roughly mean the strength of the response. So here's a strong response at 60.50, like we talked about. Over 60.50, we get into that 60.50, 60.60 call debit spread area. So it kind of calculates out there. However, they run their calculations, I don't know, et cetera, et cetera. Um, Here you see the confluence of numbers 2, 3, 4, 5. This is kind of where we're supposed to hang out, job zone. I'm not sure why. And then, as I said before, there's not much below here. And so 60, 50. And here's 1 day min, 1 day max. However, I'm not sure if they use volatility or whatever they use. Let me see if this will populate. This usually does. I'm not sure what happened. Maybe I didn't click something. Or show levels, maybe. Oh, small. Hi, is this a new thing? Hi, Twitter. It's a new thing for me. Yeah, I started doing it yesterday. So yes, it's a new thing. Welcome aboard. Um, and I'm going to be doing this daily, and I'm going to have other people do it. See if I can get them to join me. Get your favorite Twitter personalities on board, so to speak. I'll see if I can get people to come on and do a little talking. I'll be doing some intraday stuff as well. My brother Binkus, who some of you follows, does intraday scalping. It's funny because he usually starts scalping at noon, and I'm usually up at like 5 a.m. And his like holding time, he'll be in position for 2 minutes is a long position, and I'll leave my iron condors on for hours. And so it's a very different style, and he uses different secret sauce. But he'll be on at noon. I'm going to try and do something at maybe 11:30. Just pop on for a little while, kind of see where we are before the euro close or afterwards. There's certain okay, flying conduits is obvious level for the top side. Doesn't appear to be much dealer support below. What areas appear to be strongest for the IC bottom? Yes, there's no support below. Let's take a look at ICs right now because I haven't actually constructed my own yet. And well, if we have to, we'll go back and forth. Not investment advice. Don't sue me. Okay. And we're going to kind of look at this and we're going to, I mean, you can sue me if you want. I can't stop you. Not investment advice. You all heard it. And I'm going to talk about what I'm going to do. You can do whatever you want or what I'm looking at doing. Okay. Now 60-50 is an obvious level, but it's a dangerous level. Like I said before, we got all these market makers long calls over here. I mean, market makers short call, customer long call. As of right now, there are 16 deltas. 16 delta matters. 16 delta times however many thousand contracts are there really matter. If we move up and these, the 20 delta already matters in terms of rate of change of convexity. So we have all these stacked calls, a lot of them long. Remember I showed you that little cluster of longs? That's why when you look at the chain, you have to look at what are you looking at? What's long, what's short? Most of us, I'm going to imagine, buy or sell spreads. And so you have to see what's what. Or it doesn't have to be most of us buying or selling spreads. If I'm an institution, I buy 2,060-25 calls. And you're an institution, you sell 2,060-25 calls. We see open interest of 4,000. Market makers have none. They took the ones I sold them and sold them to you. So open interest is a start, not an end. So 60-65 top, I like that. I like that 60-65 top. Let's see how it prices out. I like that. That's fine. If I wanted to go a little wider, and I will literally put these in and leave them. I'm not going to do 10 or 20, but I'll leave one. I'll come back and take them off, put them on, turn them into flies, do whatever I want to do later in the day. It's just one. 60, 65. If we play the 10 wide game, whoops, 70 cents. Oh, that's not 10 wide, that's 15 wide. 10 wide game, 55 cents. That's decent premium. So I'll throw one of those in, see what happens. Not throwing 10 of them in, I'm throwing one. All right, now, like everyone has said, here's where it gets tricky, especially with us up here. If we were down here, if we were when I started looking this morning, we were at 60.05. Oh, great. I got Ontario County tax people calling. I got to pay a tax bill. Let me mute you guys for a second and tell them I'll call them back. Okay, long story short, I thought I mailed the property taxes in, but this one thought that one did. I thought they did. He thought we did, and nobody did, and nobody dropped it off, and so I got to send my taxes in. Um, but if doesn't matter because we are where we are. So let's get back to where we are. So what I'm going to do, and I'm going to start off with my wish trade. And, that's not really decent premium, but I'm going to make it a wish trade and put it in for 60 cents. And if it fills, I'll take it. I'm pretty comfortable with this level. I mean, we have an expected move of 32, and that's double the expected move. We have a basically supportive structure. Let me zoom in on the structure. We have basically supportive structure here. We got this stuff over here, toward the end of the day. Stuff, technical term. We got this stuff over here. We got the 60 path of least resistance, so this area should be okay. So if I were to be a little more aggressive, just let's say for fun, something like that, something like this. I like to stay away from the round numbers. It's just one of the things for me. I might throw one of these in. Not only might, I will. I throw one of these in. But if some people like to play them kind of tight, and that's fine. If I were playing it tighter, I might go. I might put something in later in the day. I might do something like, I don't know, something even like this. Let's just pretend something even like this. But you see, and maybe would want to, if I wanted to be a cowboy, do something like that. On 5 wides, I like to try to get a quarter the width of the spread. And what I always do is when they fill, I put in a buy to close at 50% automatically, and some at 65%, and then I see what happens from there. I personally, this is just me, I will not leave a trade sit on until expiration. If I'm out at 65% in an hour, great. That happens a lot. I'm happy. I don't care if S&P 500 is 6,100 and I'm short the 5,800. I'm closing it. That's me. That's me. Not investment advice. You got it. Thank you. Clever. Um, so that's that. Switching gears one last time to wow, I'm long-winded, folks. I like to talk. That's not. I enjoy doing this. I enjoy it, and I'll admit I don't mind an audience. I was never one of those people that got nervous for public speaking. Some people do, some people don't. I guess, and as I've grown in life, age-wise, and psycho spiritually, so to speak, I find it just real comfortable being me. Anyway. Let's not get down there. We'll do a psychology thing another day. I'm also a retired psychologist. Um, oh yeah, I wanted to take a look at Tesla. Remember we talked about Tesla? Some of you that were there yesterday, and quick trade review. I put the trade in that we talked about, non-investment advice, etc. Um, Yesterday, when we looked at it, we had Tesla, we had that 95 level, and we talked about 300 being the flip inflection point, and we talked about 310 to 320 being the convex pull, and that's what happened. I didn't get into the chain and dig in there. I have trouble getting the daily code to appear on my training view chat. Is there a support email or resource for help? Boomer trade. If you're a boomer like me, I'll figure it out because I had to have someone help me. I thought I sent. I don't know if I sent you. I sent somebody the link or whatever that you put it in. I've got somebody making a video for me on how to do that, but I will get to you today and make sure that you have a slot to put it in. I just had somebody make me this slot and I put it in. All I know is it's a TradingView thing with a slot, and I have a way of sharing it with you. And whatever kid it was that made it, I'll have the kid share it with you. By kid, I mean under 50. So yes, I will get it to you. And I think there's somebody I did this for the other day, and there is a free TradingView indicator out there, and I should put this in my subscriber package, whatever it is. I think it's called something like .spx slot levels or something like that. I have it saved somewhere. I'll make sure to get it to you. So I will get it to you. Okay. Victoria's laughing. Okay. So anyway, so there's really no trade that I see in Tesla now. I mean, I'm sure there's good scalps, whatever. Not for me. You're welcome. Are you really a boomer, or is it boomer like, boom, we're going to the moon? I'm chatting with somebody on Twitter here. Okay, while I'm doing that, did I shameless plug put my Substack in there? I don't know if I did. Let me shameless plug put my Substack in there. Copy link. Shameless plug. Substack. Um, where am I? Shameless plug. Discount code. Well, not a plug, so I don't really care. You know, somebody subscribed and I got $11. I'm not worried about $11. And truthfully, I just want to help out the people that help me. Shameless plug, or not a plug. Options depth, mentor Q if you're interested in a broader array of underlyings that are covered, not just SPX. Uh, Futures, they cover all kinds of futures. They have a dashboard of products. I'll have Fabio come on maybe and talk about some of the stuff that he has. Um, and that's that. So a couple of shameless plugs, and that's it. Oh, one other thing, and I'm just going to screen share it. I don't have the tech expertise. A friend of mine does this for me. Thank you, Steve. Um, she's my spreadsheet person. I can barely open a spreadsheet. I'm not kidding. I've told the anecdote before. I'll tell it again another time. Um, but long story short, my dad kept the books of his business on the back of business cards and on bags that customers returned. He had a clothing store, and somebody returned a pair of pants. The bag would be smoothed out, and if it wasn't too wrinkled, it would go to the next customer. If it was too wrinkled, then it became paper where the price of the jeans was written down, whatever. And that's kind of been my bookkeeping method, so I can't open a spreadsheet pretty much. Um, so I have my spreadsheet friend help me, and this is just basically my levels. You can see the screen. This is pretty much the same thing that's on the roadmap, the same thing that's on the trading view thing, just in an easier to visualize way. And as spot moves throughout the day, one could mentally just kind of shift up where we are, where we're going. But the levels can't have your business hacked. That's true. There you go. Exactly. That was my reason all along, Drew. Thank you for the save. And the other thing about my dad's business practices also, which is kind of the way I keep my books, whatever was in the cash register was in the cash register. What's my cash flow? What's my cash position? I don't know. This is what I have in the cash register. This is what I have literally in New York, we had steam that heated the apartment. Underneath the steam in the whatever was a dugout, whatever, and that's where the cash was. And then there was also money in the bank account. So what's there? X amount of leather to have the manufacturer make this many leather jackets for the next season. And so yeah. So my books or something. Anyway, and so this is a feature that paid subscribers get. It's handy. It was actually somebody who is busy during the day and was like, I can't pull all that stuff up. A friend of mine, and he's like, is there some kind of easy cheat card that I can look at so I can just see what they are? So I asked my friend Nanda, who I don't know if she's on here or not right now today, to do it. And apparently for her, this is like a yawn, and for me, this would like be a 3 months project that I would never get right. So anyway, here it is, and it's handy. My subscribers get it, and it gets updated, whatever. And just for fun, here was the cheat card from yesterday, and it's pretty much the same. That was a 2 o'clock one. Pretty much the same. A couple points difference here or there. Was pretty much the same. Like I said in my notes, been the same levels. If you've been watching the charts, it's been the same levels. Here was the update yesterday when we shifted up, and we came up in here, and then we shifted right back down. Same levels. And that's it. Okay, now I'm going to go to, I'm going to sign off and go to Vol Signals. He'll be on, I think, Friday. I'm trying to nail him down for Friday around 10:30 to kind of do what he does. He's a former market maker. I'm in his mentorship group and his VIP group and his whatever it is he's got. And yeah, I pay him for the courses. I've taken courses, his courses, Mentor Q's courses, Spot Gamma courses, Gamma Edge courses. I've read whatever I could read and options that, whatever. And so, yeah, I don't mind. Education has always been my friend. And anyway, that's that. Have a safe day, everybody. I'm going to end the stream now, and I will be jumping back on 10:30 ish. I'm not overly compulsive. We'll call it 10:30, and I'll put it out on Twitter again and wherever. If you're on a Discord server that I happen to be in, I might or may not remember to put it there. And hopefully, I see you guys later today. Thanks. Um, you can always tag me wherever on social media, on Twitter or something or other. If you have a question, a comment, or whatever. Yeah, so right here, oh, Drew. So Drew, he's about to jump over to Val Sigs also. And I found this out yesterday. I could put comments there. Isn't that cool? I don't even have to do anything but click. See that? Isn't that cool? All right, guys. Oh yeah, my boy. Please help Doc with like on the video, like, reshare, all that kind of thing. Same thing on Twitter, right? Reshare, tag all your best friends, etc. Okay, thanks a lot, guys. Have a great day.